All right, welcome back, everyone. We're going to get right into the stock market technical analysis. We'll look at what the markets are doing now, and again, we're looking for technical trade ideas for the future. So, as of right now, we know the market is extremely bullish, almost euphoric, I would say. Retail traders, I think, are extremely euphoric. I'm seeing comments in my just in my daily feed talking about how basically we're in a brand new bull market and it's time to go long and all that. And oftentimes I do want to point out, very quite often, especially in a bear market, if I go to the daily chart here on like the tech sector, triple Qs, you'll see here, especially in a bear market, this is how it feels at or near the end of a bear market rally. Okay, the last rally, we had a little rally right here, but this was probably the most impulsive one that was last up. That rallied about 23% off the lows. Okay, now the one where we're at right now, we are up about 20%. So in general, we're up 20%. Doesn't mean it has to end here, and it does not mean that we are still in a bear market. I'll point out kind of what I'm looking at right now, but I do want to just point out that this is not the time to typically go long. So if you feel that if you feel the need to just rush in and go long and buy because the market's never going to stop going up, that's euphoria. That's called, we don't chase on this channel. I don't chase personally, and I don't really teach trading around chasing. So if that's how you feel, then I think it's it makes sense maybe to just kind of sit on your hands, and not enter into any trades. Give it a second. The other thing I want to point out, and we'll talk about this, we have the major cap, a couple major Fang stocks reporting earnings today. So from my perspective, and I had a lot of people, I had some people say, oh, we just broke the trend line. It was bullish. Why didn't you just take the chart for what it's worth? Yeah, it is bullish, but the thing is, it was bullish right into the Fed and into these Fang earnings. So from my perspective, not a time that I really want to be loading up on a position long heading into huge market moving events. Now, there's no telling which way the market's going to break after that market moving event, but it's higher risk. It's really just gambling at the end of the day to take a major trade into a big market moving event. Okay, so given that we have these big earnings coming out, I do want to point out a couple things. We'll look at the Fang stocks. On the triple Qs, the downtrend line, obviously on the daily, we're well above that. So clearly that trend, this downtrend has been broken. Doesn't mean that we're starting a brand new bull market. Just means that this downtrend in the bear market has now been changed basically. So we'll definitely want to look at that. I don't think by any means is it extremely bearish right now. Obviously, when I look at the chart, I see a breakout, kind of a back test, and then just we're off to the races. So at face value, it is bullish and really nothing besides that, okay? The only thing that I do want to point out is these Fang earnings can change the way this chart looks. So we will keep an eye on that. On these Fang stocks, this is really the what I pointed out. I already pointed out early this morning to the private member group. Amazon, you'll see here that here's your downtrend line in Amazon, and that has not been taken out, and we are trading right there at the 200-day simple moving average, okay? The last time we hit the 200-day simple moving average on Amazon was right back here. You can see we basically tested it right there, and that was at the high. The end of that rally was right in that area before Amazon fell another 43% from that reaction. So again, not the time to be going long, at least not right yet. We do need to clear these earnings out of the way. If we go to Google, you'll see coming off the highs. This is GOOG. You've got couple reactions. We're above the 200, but you can see we are getting rejected so far today. So trading at that trend line resistance. So Google's at resistance. Amazon's at the 200-day moving average, which should be resistance. Let's move on. Let's look at Apple. Apple, just slightly above the 200-day moving average, but of course earnings are coming out. So to see it pop above the 200 right before earnings, to me, looks like a trap, all right? I just have to say that. Doesn't have to be, but to see that, we couldn't get above the 200-day except for the day before it reports major earnings. Who's buying this, I guess, is what I would say. Who's loading up on Apple right before they report earnings as we pop above the 200? Looks like a bull trap to me, guys. Don't, we'll see if that plays out that way. Also, it looks like we have some resistance here on Apple right about, it's about 151-ish. You can see lots of reactions right in there. There's some right there. It's just a key level I've had with plenty of reactions. So I would say we're definitely at resistance there on Apple as well. Meta's kind of the little outlier, but Meta doesn't really move the triple Qs too much anymore. It's just not that large of a company, not like it used to be. So Meta's, off to the races. There's some resistance here on Meta at about 181.75. We'll see where we close the day. Okay, there's, you can see resistance. If they sell this thing off into the close and we close back down, below that area, then, in general, it's just going to show that is resistance. Day's not over, so we'll keep an eye on that one. And Microsoft, same kind of look. You can see here on the downtrend line, we've got clear downtrend on Microsoft, and we are trading, again, above the 200-day, and right there at key resistance. Now, Microsoft's already reported earnings, so you don't have to necessarily worry about that in this one. However, these pretty much all move together. If Apple sells off, then Microsoft's going with it. That's typically how they trade. So popping above the 200 just today, right before those big earnings, looks like a bear trap or a bull trap to me, guys. So that is just my read on it. Now, do I want to load up on a position short right now? No, I think I'll take a small short position into the close. Nothing that would really hurt me if it goes against me, because it is very much higher risk taking a position right ahead of earnings. Either way, whether that's long or short. I do like, if anything, I would favor the downside only because of all these key Fang stocks hitting resistance. All right, let's go into some individual trade ideas and look at, even though the tech sector is rallying strong today, a lot of the trade ideas that I pointed out recently are all working. So we'll look at those, see where they're going here in the future. Guys, if you're finding value in the content and you're interested in learning this as a skill set, more than just watching YouTube videos, check out my stock market technical analysis course. That's a course put together at the request of my subscribers. I priced it affordable, and it is there for as a resource in trading. So check that out if you're interested. Link in the description below on that one. And then finally, the private member group will be, that's a group where I basically provide additional market insights, additional trade ideas. I've been giving out lots of trade ideas in the last few weeks in there, and many of those have worked out. So if you're interested in that, feel free to join up. $5 a month. No, you can cancel if you don't like it. JP Morgan, nothing really going on today on this one, but it still looks okay for a short trade. Earnings is out of the way. We do have that. We're just I think everything's kind of just holding up, waiting for those Fang stocks. So we'll see where this one goes. I think it goes to the downside, but yeah, we'll see. They could easily pop it up and make a new divergent high as well. All right, Caterpillar. So we talked about this one. Again, continuing to the downside. I don't see any reason why it's not going to continue going lower. We had a sell signal really back here on the 19th. Back tested for a couple weeks, and then it's pretty much, been impulsive selling ever since once it broke. So I do think that's going to continue. Minor support here at about 237.55. Yeah, I think that's like the next level of support there, where we'll probably get some sort of a reaction. But the ultimate target for this one, I believe that's going to play out over the weeks, maybe months, is a move down to here, which is this gap fill down around 200. So that's kind of my level that I'm really looking to target. Anywhere down to the 200-day moving average, 207 down to 200 gap fill. And I see no indication that this trend is not going to continue to the downside. Okay, DHI. This one's not really working too well. It's trading with the growth stocks right now. We do have, we have this bearish rising wedge, broke down, had a sell signal. They've recovered the wedge, and we're now at the top of the wedge. So this should be resistance right here. Any more upside from here, I'm going to have to stop out. and just take the loss. I think, if you enter the trade on the sell signal, maybe you're down 10%. Yeah, I mean, I'm down about 9% on this one. Now, again, that seems like a lot, but again, if you take position sizing properly, then I think it's still okay. We were targeting a profit target of this gap fill down at 78.70. So even if you took the position at the end of the day, that would be a move of about 14% down to the 200-day moving average, 17%. So close to a 2-to-1. We're basically pushing the 2-to-1. So at this point, we do want to stop out if we go much higher because the trade just isn't working. So we'll keep an eye on it. I'm going to give it a little room. Obviously, I want to see how things kind of play out after these large cap tech earnings. Okay, CrowdStrike. Pointed this one out yesterday in the private member group that we were breaking out. I kept talking about this level 107.54 as the next level of resistance, that if you see a breakout above there, that would be your buy signal. We did get that yesterday afternoon. I took a long position on it as we started to break out. Today, gapped up. I'm taking my profit on this gap up here. So as we gapped up, I sold this morning, took my profit for a quick, really for a quick, it's about a 7.5–8% gain on that trade. I don't want to hold this into these earnings, so we'll just take the money and then wait and see. Okay, this one, MDT. We talked about this one for a long time. I did not take this trade. I just, got shooken out of it and just decided to not jump back in. But it did work out as expected, pretty much perfectly how I was explaining in the past. I think we're coming into resistance now. So on this one, you had a bearish rising wedge. Bullish falling wedge here. You had bullish divergence on the daily chart. We had a breakout and a buy signal. And, you can see it broke out, kind of back tested, and off it ran right into the area where I think we're at resistance right around now. It's about 87 up to 88. You got the 200-day moving average. It's a zone of resistance. So, I would, personally, what I would do is take my profit, by the end of today on this one, just with the earnings coming out, we're rallied into that key level of resistance. This thing from the breakout point rallied up 8–9%. So I think that there's a reaction likely, a pullback. Doesn't mean it's not finished to the upside, but definitely a pullback at or near the current levels. All right, MRK, Merck. You can see here, this one's just gapping down 4.5%. So even though the market feels extremely bullish, it's a stock picker's market, and the ones we're picking, at least the individual trade ideas, most of them are working. They're not all going to work, and so again, I can't be 100% accurate, but most of them are working, and in general, even though I've been short many different individual stocks over the last 2 days, as bullish as the last 2 days have felt, it's been a profitable last 2 days shorting these individual stocks. So here it is, MRK, just rocking down. Our target on this one's about this 95 area. It looks like it's just heading straight down there. So maybe a little reaction right around in here, about 98. But I'm looking for that 95. It's about 95.50 or so. The 200-day moving average, anywhere down there. We've got to get down there, let's say 5–6%. So I like that one. No indication that trend is going to change, so lower. Okay, VRTX, another trade idea that was pointed out on the channel as well as to the private member group in advance. VRTX, that was our key objective area to short. I talked about that in the last couple videos. We had negative divergence, nice clean negative divergence on the daily. A bearish rising wedge pattern, break of wedge, a nice clean back test, and just very, very objective to short right there. Sure enough, that has worked out so far. If you short it right on the back test, you're up 6% or so as of right now. I think there's more downside to go. I see some support right down here at about 273.50-ish, right in there. And then big support at 245. We'll call it 245, somewhere right in there. Big support. So that would be, I think we do this. I think we bounce, probably get a little bounce, roll over, and at the end of the day, end up down there. So those are my targets. Okay, WMG. This one is just like doing it as expected. It's just kind of grinding around, backtesting from below this trend line, but it's going to probably continue to grind around into earnings. So Earnings coming out next week, it looks like. So there's not a whole lot to do on this one. Just let it, I'm just kind of letting this one play out. And then let's look at commodities. We've got wheat. Wheat needs to break this level right here, 778, 777. That's kind of, that's resistance right now. I think if we break that, we should be off to the races for a nice, decent rally. A lot of these commodities, when I look at like sugar, which is cane, just nice strong rally. Obviously, coffee had a nice strong rally. Cocoa has been rallying. Wheat, and it's a lot of it goes down to the war that's going on. But I think wheat can run. We just need to see that little breakout. So that's what I'm looking for. And Starbucks. All right, Starbucks, very bearish setup. We don't have a sell signal yet, and we have earnings coming out. So we have a bearish rising wedge pattern, very clean, nicely defined wedge. Negative divergence on the daily chart, on the momentum indicators. And we need that sell signal. We've got earnings coming out, looks like after the bell. So whether that triggers the sell signal or not, I don't know. So, this thing looks like it's ready to break down. Here's one way to potentially play it. Take a starter short here before it breaks down, because it's going to, if earnings comes out, it's likely going to break the wedge on the earnings report. So it can go one of two ways. I think if earnings comes out and they like what they hear, we could rally up to the top of this wedge, somewhere up here, maybe 113, 114, somewhere right up in there, maybe overshoot it and then roll over. Or if earnings comes out negative, they'll break the wedge and we'll start to head down, probably gapping down to this 101.53 area afterwards. So one way to play it, maybe a starter short. If you rally up to this resistance, you could maybe add to that short position, but not above. Don't want to add above, and give it a little room, and you look to stop out maybe up. Really, I'd look to stop out on a daily close above this 117.73 area. You can see there's some resistance right there. I'd want to see that daily close up and over there, but probably look to stop out there. And then obviously if it breaks down, you can add, but it might not be that favorable depending on how far it gaps down. So something to look at. There's a trade setup for sure. Okay, that's all I have for today, guys. So drop me a thumbs up, leave a comment on anything you want me to look at, or just let me know how I'm doing. Check out the Stock Market Technical Analysis course, link in the description below. There's a lot of value in that course for not a lot of money. So I think there's a good value course there. And then also private member group. We hope you join up. All right, I'll catch you on the next one. Bye.